Hello, I'm Vidya, your tutor. Let's learn recording of transactions, together step by step. Hello, I'm Vidya. Now we begin actually recording transactions. We will understand the accounting equation, learn the rules of debit and credit, and pass our first journal entries, the source from which all books flow. The accounting equation states that assets equal liabilities plus capital. Whatever the business owns must be financed either by outsiders, the liabilities, or by the owner, the capital. Every transaction keeps this equation in balance. Under the modern approach, increases in assets and expenses are debited, while increases in liabilities, capital, and income are credited. Decreases work the opposite way. Memorize these rules carefully, because they govern every entry you will ever write. Before recording, we need evidence. Source documents like invoices, cash memos, receipts, and checks prove that a transaction happened. From these, we prepare accounting vouchers, which become the authority to make entries in the books. Let us record buying goods worth 5,000 rupees for cash. Purchases account is an expense, so we debit purchases account by 5,000. Cash, an asset, decreases, so we credit cash account by 5,000. Debit equals credit, the entry is complete. The journal is the book of original entry. Each entry shows the date, the accounts and particulars with debit written first, the ledger folio, the debit and credit amounts, and a short narration explaining the transaction. This orderly record prevents confusion later. To recap, the accounting equation always balances. Debit increases for assets and expenses, credit increases for liabilities, capital, and income. Source documents support every transaction, and the journal records each one with debit, credit, and narration. Great work! Keep learning with Vidya and visit CBSETest.com for free lessons, worked examples, and practice tests.